Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
KOSPI, which is the Korean index, down almost 0.5%.
We're very close to a deal with India where they open it up.
The support is 56,594.
Mechanical and metal precision components will also be a slightly higher double-digit margin.
25,200 on the Nifty. Nifty Bank is up about 0.25%.
See the current quarter results in the context of what India has been going through for the last year.
We have a very large user base. We are the largest OTA by user base.
Today, the mid-caps, they continue to do well. It's flat, but with some positive bias.
The local plant in China will be part of a long-term roadmap for collaboration between BYD as well as Sona.
50-point cut, so Nifty has been around those levels for the longest time.
Okay, well, most of the day, and the day as you saw sort of played out on the on your screens, the wrap out of the day. Now there is some sort of meaningful kind of, not meaningful, but more pronounced drift which is starting to appear. The Nifty is down 65 points and the Sensex is down about 200 points. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, afternoon.
Hi, good afternoon, folks. Yeah, the color is red. Now, let's see, because, I mean, the market has flirted with these levels before as well, and we had buyers come in. Now, will that happen today or not? We'll have to see. But financials are a very, very clear weak spot. Yeah. And on the other side, some of the global-facing sectors like metals, actually. Metals are shining really bright, and we'll talk about that as we go.
Well, that's right. Though, in fact, if you look at the headline index, it's a little bit lower, and we have expiry that will play out as well. But we continue to remain in that band. You'll have to say that. And stock-specific action, well, you picked the right one. You made a lot of money. Ixigo, case in point. The stock is now at the high point of the day, and it's moved up on very, very solid volume. So that's the big winner for the day, Le Travenue's Tech. Just take a look at that, 17% higher.
It's didn't do very much after the listing for a while, and then, of course, started to climb. I want to quickly make two levels, is nothing more. Basically, you just have to look at the lows that we hit on the Nifty in the last 4-5 days. So for the Nifty, that number is 25,001. Basically, 25,000 is the support. I mean, if that breaks, then you basically have to reconsider everything once again. And for the Nifty Bank, that level is 56,594, which is, again, about 100 points away, which is the low that we saw in the last 5 odd trading sessions. So very close on the Nifty and the Nifty Bank from those near-term kind of support levels. But we'll see if those come into play. Otherwise, I mean, it's been very, very dullish kind of market. There are sparks and rockets which fly around, like Ixigo, and we'll talk more about that. But generally speaking, it's almost been 2-3 weeks now that markets remain very, very ranged, and that range has kind of gotten compressed more and more day on day. Surabhi.
Oh, absolutely. Well, let's get to some of the individual movers and shakers. On the Nifty, batting for the bulls, like I said, are certain metal names. So pull up a Tata Steel and Hindalco, 1.5% up on these stocks as we speak. And then once again, the consumer rally is building up again. There's also, maybe a bit of a defensive bias to the market right now that could help. And then the general sense that maybe over the next couple of quarters, earnings will be better. So FMCG is actually doing well. Tata Consumer, Titan, Trent, these are the stocks which are up and about. Lever also flashing a little bit of green. However, on the flip side, today has been another disappointing day for IT. So, there is Tech Mahindra. We had numbers from Newgen Software, one of the smaller IT companies, mid-sized IT companies, where people have a lot of, faith and expectations. It's been doing well in the past, but again, the numbers have disappointed in the quarter gone by. And look at the cut on Newgen, and look at the disappointment, because it was not primed for a fall in terms of the performance, and that's what happened. And then there's immediate crack. So put two stocks together, Newgen on one hand and Ixigo on the other. It's just telling you this market is driven squarely by numbers. Maybe you can get both the charts together. So Realty Metals and Ixigo tells you exactly how the market is positioned and thinking about stocks and earnings.
Well, and for all that we have said, the advanced decline ratio is very much even, Stephen. 1,300 stocks apiece. We should get that one up for you on the screen as well. And the mid-cap index is still doing a relative outperformance. The problem today is that, in fact, you have the Nifty IT stocks as well as the Nifty bank IT stocks. So you just put the IT index as well as the banking index up. Both of them are under pressure, down 0.5% to around 1% or thereabouts. So that's why the markets are a little bit lower. Now, since it's expiry today, just highlighting two options. The 25,200 call, well, that's been written very, very aggressively. At the start of the day, the premium was around 63 rupees. So someone who has written that strike is taking home, that entire money as we speak, because the premium's down to almost zilch with a big open interest build up. While on the flip side, the 25,150 put, that's been seeing actually a mix of activity, because the premium has moved up a little bit over there from around 12 rupees. It's at around 19 rupees or thereabouts. So we'll have to keep an eye out on that front. Putting the technical levels in, as well as, if you're looking at the options data, the near-term resistance is at around 25,250, because if you're writing the 25,200 call, put together the premium of around 50-60 rupees, then that's the near-term resistance. But on a longer term, the 20 DMA, which comes up for you on the street, 25,300. On the downside, going by the options data, this 25,100 level should not break. So just keep an eye out. For the time being, last 60 minutes to go. We're in this tight band, 40 points away from the support level. Let's see whether or not the bulls have a bit of a plan, still under the wraps, and whether it plays out in the next 60 minutes or so. But I'm expecting one big move. We're down close to 70 points. I'm expecting one move in the next 55 minutes or so. That said, let's get Mitesh back with us on the show. Mitesh, you've been calling for lower levels. 24,800 is the call. So you're using the bounces to short into? Is that correct? And if yes, when does that short call get negated? We'll get to Mitesh in just a bit, I think. We'll just try to get that line back. Yes.
Yeah. No, in the meantime, while we reconnect with Mitesh, I just want to point out that global markets are actually holding up really well today. In fact, even a market like Japan that started negative because of a weak export data, even that market picked up by the end of it and closed 0.5% higher. And European markets are up between 0.5% to as much as 0.7%, depending on which index you're looking at. Mainland Chinese markets are the only ones, Hong Kong and mainland China, that had a bit of a red on them. Yeah, there you go. I mean, that's the kind of performance across Europe. Very, very strong. So let's see. Waiting for more tariff clarity from the US president. And of course, the Powell headlines that keep coming. But I think we have Mitesh back with us. Mitesh, go on. You were telling us about the index. It's also expiry Thursday. So how would you place the bets on the index and individual stocks?
Good afternoon. So I think that the view of 25,300 odd remains on the Nifty. Till we cross that, I won't turn extremely positive. But maybe at lower levels, in case we decline, we can go back to 25,030, 24,850, 900 zone can be tested. That's where aggressive buying could be done. So it's a market which is not looking very bearish, but yeah, there's a mild downside bias on the hourly chart till we start getting past 25,300. On the stock side, I have a buy on Astral. That's a buy with the stock with the stop just below levels of around 1494, and a target of 1550 can be looked at. And ICICI General Insurance, so ICICI GI, that's a sell call with a stop at 1980 for targets of around 1875.
Got that. Mitesh, thank you very much for that. By the way, actually, why don't I request you to just stay with us? Just one more name I want your thoughts on technically, but let's get the story out of the way, right? So there's a IRDAI appointed committee which was looking at the proposals in the Insurance Amendment Bill. One of the proposals was allowing insurance and non-insurance companies to merge. Now, that committee has submitted its proposal to IRDAI, and IRDAI now is going to sort of take it to the government. And their answer to that specific proposal of allowing merger between insurance and non-insurance companies is no. We don't like it. Yash, take us through the details.
Well, Prashant, the proposal that you're alluding to is essentially about allowing merger or amalgamation between an insurance company and a non-insurance company. As you said, the government released certain proposals with respect to Insurance Amendment Act. This was one of them where the government wanted suggestions whether this should be done or not, which is not allowed at this point of time as per Section 35 of Insurance Act. The insurance regulator, after the proposals came from the government, formed a committee. This committee was led by former SBI chairman Dinesh Khara. And the committee was tasked with the responsibility of giving its views. It had about 7 experts from different fields, ancillary fields as far as insurance is concerned. The committee was tasked with the responsibility of giving suggestions whether, insurance merger and amalgamation with non-insurance companies should be allowed or not. What we've been given to understand from our sources is that the response or the suggestion from the committee is a no. The committee thinks that this could lead to potential large risks for policyholder, depending on the nature of the risk which the non-insurance entity takes or the business risks which come in its way. It could pose a risk to the policyholders of the insurance company, and hence, as suggestions from this committee which have gone to the insurance regulator, it's a no. They feel that this should not be allowed and should be continued the same way, which is not allowing the merger between an insurance and a non-insurance company and only allowing mergers between 2 insurance companies. Of course, various other proposals have also been given suggestions on by this committee, but this was an important one, and it's particularly important for Max Financial Services because they've been very hopeful of an approval from the regulator for a reverse merger of Max Life into Max Financial Services. After this proposal was released by the government, the holding company discount of Max Financial Services and Max Life, which at one point was about 18-20%, had almost diminished. But now it creates fresh uncertainty of whether that merger could happen or not, the IRDA would approve it or not. And hence that holding company discount, the risk of it coming back emerges once again.
All right. Thanks very much, Yash, for that. So that is a story, really, which we're talking about. Mitesh, if he's waiting, Mitesh, just a quick word on Max Financial, if you will. Stock's done well?
It's done very well, Prashant, from levels of 1,000 to about 1,650. Now looks like getting into a corrective mode. I think the medium-term support's kicking around 1,450, 1,445 zones, give and take a percent here and there. I think that's where the stock can be bought at or look for buying into.
Thanks very much, Mitesh, for that. At the bottom of the screen, news which is flashing and the stock is up sharply. We'll get some sort of context for this. But Wilmar International to replace Adani as the majority shareholder in AWL Agri-Business to hold a 64% stake, and some of the other allied sort of details which are part of it. Adani executes sale of 20% stake in AWL Agri to Wilmar International Singapore at 275 rupees per share. And there is more. 13.5% stake in the OFS in Jan 2025. And of course, more now. So total 64% stake is what this kind of amounts to. So as I said, maybe more with Mangalam in a bit. But Devin is with us. Devin, quick thoughts on, I don't know if you can see the story which is at the bottom of the screen with regards to Adani Wilmar Agri. And of course, the story which Yash put out, Max Financial Services. Growth, we'd get these numbers every month. Growth for Max Financial actually has been pretty good. It's outpaced some of the other private players. Go on.
Yeah, Prashant, good afternoon. Well, my understanding is that allowing the insurance company to merge with, say, for example, non-insurance, and in which, say, for example, I think you consider NBFC company. I think one common thing which they could possibly travel together would be the common database on which I think the cross-selling, upselling can happen. And that could potentially, I think, bring the business up. At the same time, cost of acquisition of customer can come down. That could be, I think, the move which can support it. At the same time, considering the fact that I think the new data policy is going to restrict, I think, some of the group companies to possibly cross-sell the data between each one of them. I think if you have this kind of a merger in place, then possibly the purpose of serving the customer, same customer, I think gets absolutely, I think, very clear. Some of the banks could also, I think, consider that. But as we understand, insurance is a long-term contract. And in this kind of contract, liability is underwritten. Such kind of situation, I think it is better to keep this kind of businesses separate instead of, I think, allowing them to merge or amalgamate with the others, because it could indirectly pose a risk to the other businesses, I think, if not handled well. So in my viewpoint, I think this is a limited viewpoint at this point of time that I'm having on the subject of the allowing insurance company to merge with the non-insurance.
Okay, got that point. Deven, hi. Good afternoon. Good to have you on. Just wanted to get your sense on a lot of the tech numbers that have come through, especially tier 2 tech. I mean, numbers are all nothing great. In some cases, the management is talking about Q1 being the worst and improvement, further down the year. Whether it's L&T Tech or, some of the other names as well, even Tata Elxsi, even everything's been weak so far, tier 2 technology, new gen right now. Would you be a buyer of any of these stocks at all?
Yes, Sylvie, good afternoon. Well, I think we have understood the subject well from some of these companies and interacted with managements as well. I think the commentary which Tata Technology among all, I think has been quite positive commentary, which probably I think they have given. They have clearly given a roadmap as to how their business is basically now shaping up from the growth perspective. At the same time, I think the higher amount of contribution coming in from the JV that they have entered into could be a reality in these coming quarters. So in my viewpoint, though, I think they may not be able to achieve the double-digit growth immediately, but by the end of the current financial year, hopefully, I think with the number of contracts or the deals that they are having in hand and execution program that they are conducting, along with, I think, the newer orders that they are writing, particularly from aviations, I believe that I think they should be getting back into the double-digit growth program and with a relatively better margin. So it looks relatively more promising than others, at least at this point of time. Maybe Tata Elxsi has given a very subdued outlook for them in the current year. So we'll have to wait and see.
Look at the Polycab numbers. There's a clean 10% beat on net profits as compared to expectation. 600 crores in net profits compared to 518 odd crores. That's a well-traded name. Lots of interest, lots of institution and otherwise ownership here. And that seems to be a beat. Stock, though, is flattish, I guess, waiting for other details as the numbers will start to come in, EBITDA, net profits, etc. Revenues, I think, are also better, yeah. 5,900 odd crores compared to 5,650, which was the CNBC-TV18 poll. EBITDA, I mean, clean, almost 100 crore beat on EBITDA as well. So now I think the stock will perhaps start to react a little bit, 858 compared to about 750 odd crores.
I remember all our conversations in the run-up to the earnings season. Wire and cables is the one sector that's been singled out by most analysts as the one where you'll finally get growth and decent growth. And a lot of upgrades have started coming in even before the earnings season kicked off. And that explains, now 3 months the stock has already rallied 30%. It's positioned for a very strong quarter. And what is being delivered is, I guess, ahead of expectations as well. So still looking good. And the stock, let's pull up the intraday now. It's cut its losses just about. 23 rupees in the negative. So, Polycab looks like a good set, but is there more in the price? That's the question because of the rally that we've already seen. Very quick comment on Polycab. Do you like it?
Yes, absolutely. I think a good company, I think with a very good clarity as far as I think the business execution is concerned. Getting into the premium segments by customizing some of the products, I think including for railways, and some of them for defense. In my viewpoint, I think this company is, I think, very categorically and very systematically moving into the premium value chain business, coming out of, I think, the commoditized wire and cable business. So we like that company. But more importantly, everything seems to be in price at this point of time. Unless we see some kind of a price correction, probably headroom on upside may not be immediately available. One will have to wait for that thing to happen over a period of quarters, couple of quarters.
Okay, all right. Cut that, Deven. Let's focus on another story that we put out earlier today. A large Indian auto ancillary company is looking to diversify its EV client base meaningfully. Vivek joins us to fill us in with more details. Sona BLW on fire. Vivek, tell us more.
Well, that's right. So, it's a very important development, especially when you're looking at Sona BLW. With a lot of inputs from our colleague from Delhi, Parikshit, we understand from our sources that the company is in advanced talks with Chinese EV manufacturer BYD. We understand that the company is in talks to go ahead and supply EV components to BYD. We also understand that the talks were ongoing for the past few months. And in fact, we just understand that all that's left to be done is the final details, as well as the decision on the contract is still pending. Now, along with that, very importantly, we also understand that Sona is in talks with BYD to set up a local component manufacturing plant in China. For that, they will have to partner with a Chinese local company. So that is also something that we understand will give a long-term roadmap for collaboration between BYD as well as Sona. Just to give some perspective, remember China has the largest automotive share in the world with almost a 35% of market share. And along with that, when it comes to Sona itself, in Q4, 35% of its revenues came in from the EV space. And remember, it supplies EV components to Tesla as well. So this is going to be an important development to track. It's a diversification, especially when it comes to the EV client base. Sona also reached out to us and gave us a statement on this particular development. They said that we are currently in discussions with a number of global and Indian customers. However, at this time, there are no specific developments or definitive updates to report on this particular matter. It's an important development, and we'll keep tracking the story as and when developments come about.
Okay, all right. That's Sona BLW. Lots of excitement. BYD is BYD going to be the next big client, 7% up. Devin, your thoughts? Auto components, EV is a big story, and BYD is a marquee name. I mean, if it comes through.
Absolutely. I think this company is anyway supplying, I think, more than 35% into this category, so EV category. And some of the other products, I think if they end up signing up with some of the larger companies like BYD, I guess I think that would be shot in arm for this kind of businesses in the company. Though we don't have a full coverage on this company, I will not be able to spell the recommendation part. But I believe that I think the fundamentals are very, very strongly positioned for companies like Sona, even for that matter, even companies like Bosch. I think some of these companies in ancillary space are really showing a distinctly high amount of order inflow from the new sector, the EV sector, in their business.
Okay. I just want to put two more stocks on the radar, and we'll give more details on them in just a bit. One is HDFC AMC. Numbers are looking good. There is almost 25% growth at the top line front. The profit has improved as well, and the stock is up 3%. AMC stocks have been doing well. The flows have been steady. The SIP book is strong. So this is one. The other is Arvind Fashions, which is now suddenly really perked up from about a 2-3% gain in the first half of the day. Now it's a 7% gain. And that's because there's a management change that's happening at Arvind Fashions. The new MD and CEO who's coming in comes in with global experience. We'll talk about this as we go forward. But just very quickly on the asset managers, the capital market plays are always in hot focus. Wealth management stocks, broking stocks, stock exchanges, they've all done well. But, how do you find mutual fund stocks in the entire mix?
Yeah, I think the larger AMC companies are relatively better positioned, particularly because I think your monthly SIPs have touched 27,000 crores. Newer products are also coming in from the likes of Jio BlackRock and the Bajaj AMC. So all in all, I would think that I think some of these companies are going to corner some large part of the share of the market that we are having. And we believe that I think 5 years from now, this 27,000 crore monthly SIP, I think would be somewhere upwards of 50,000 crore. That's a big number, I think, that we are talking about as far as the growth is concerned and the AUM book is concerned. Obviously, it has to get reflected into the price performance of the stock in the marketplace with a high amount of conviction on the profitability of the business. I believe that I think some of these companies are going to have systematic up move going forward as well.
Okay. All right, Devin. We will leave it on that note for today then. Thank you for joining in. Great conversation as always. We really appreciate it. Okay, let's take a break on that note. Come back on the other side, and we'll, of course, keep getting you more on the markets, more buzzing stocks, and also a conversation with Rashi Talwar Bhatia, partner and portfolio manager at Ashmore.
Okay, welcome back. 100 points. We were down about 60 10 to 15 minutes back. We're down almost 100 now. So 25,110. That's the picture as things stand right now. We've, of course, been discussing individual names, and there is enough to do there. Market breadth still is not all that bad. About 1,400 stocks are higher and about 1,500 stocks are lower. But having said that, at a broader level, that's been the story, I think, ever since especially the IT results started with TCS. There is pressure because that's the heavily weighted part of the market. Rashi Talwar Bhatia is with us, a partner and portfolio manager at Ashmore. Rashi, good to have you with us here, back on the program. Thank you. I just wanted some feedback from you before we talk about individual sectors and themes, etc. A lot of supply, of course, with IPOs and secondary paper, etc. But what about institutional investors, Rashi? I mean, you travel quite a bit, meet LPs, etc. What's the feedback?
Prashant, it was never expected to be a standout year, given where valuations are, given that we had seen liquidity sucked out of the system quite a bit. We always did expect a year which was going to be reasonably sideways. A lot of global uncertainties. We've had quite a eventful 6 months, to say the least. And in such a year, a market which remains within a narrow band, plus minus 5-7%, would not be a bad place to be after having the kind of one-sided rally that we've seen over the last couple of years. And I think that's how it's playing out. So nothing really out of syllabus on that front.
Hi, Rashi. Good to see you in. Thanks a lot for joining in. Well, I recall when we spoke earlier this year, I think you were hinting that maybe the broader markets are getting a little bit exuberant. And I think that played out that way, right? We saw a pullback, and then from those lows, they bounced back a little bit. How would you position yourself between these mid-cap names? Some of them, have done very, very well, but some of them appeared to have run their course. So I want to comment on the broader markets. And also the last time around, you shared, I think, one stock idea, the stock exchange, commodity stock exchange, I think was something that I liked. You could correct me on that one. But is there anything new that you all have got into?
So, on the broader markets in general, we should... I think the large caps have corrected, and more importantly, consensus earnings have corrected as well. Right now, if you look at the current quarter, the consensus estimates out there in general are very tepid. And fair enough, IT has started with quite a bit of a downer, and I do not believe that's looking to improve anytime soon. If we look at the financials, which is always a very large segment of the market, while we've seen an ease up in liquidity and RBI has acted, but the benefit of that is clearly not in the first quarter, right? We're going to see that only coming up in the second half of the year as liquidity eases. So I think from that perspective, we are going to see pressure in earnings in the first quarter, and the large cap earnings estimates have started to reflect that. While the small and the mid-cap names have seen some correction, I do not think that we've seen enough of a correction on that front, either in terms of stock prices or in terms of earnings estimates. If you look at the earnings estimates out there for small and mid-cap companies, I seriously wonder where they're coming from. But at the same time, like you said, you've seen some deep cuts in a couple of stocks. We had said chemical space last year, which was fairly out of consensus, where we saw opportunities even in a market where the mid and small cap were at all-time highs, these stocks were at all-time lows. Today, that has become a little more of a consensus play, per se, in terms of what, how everybody else views it. Commodity exchanges, a commodity exchange, or even the stock exchanges are, always, they're great businesses, they're platforms. Once you get the platform going, it's just building on top of that. There's a significant amount of operating leverage that plays out. You obviously have to keep a strong view on the end market and how that is going to play out. So with commodities, we may see a little more volatility, depending on what the US does. Do we start to see rate cuts or not? And commodities always react to that, and volatility is always good for exchanges. Whereas with the stock exchanges, you got to keep, like I said, take an end view on the market per se.
You still have the commodity exchange that you all had? Or?
Don't want to discuss what our positioning is on that front.
Okay. All right. Fair enough.
Right.
Well tried. I want to also talk about consumer and retail. Rashi, just allow me a minute before that, because we're focusing today on a specific retail stock that's very excited in trade, and we're talking about Arvind Fashion. So here's the trigger. The market is getting excited about a management change at Arvind Fashion. There's a lady that's coming in to take over the helm. So we're talking about Mr. Shailesh Chaturvedi. He'll be exiting. And Amisha Jain is going to be taking the helm. This transition is happening next month. 13th of August is what we're talking about. Now, Amisha is actually coming back. She was an earlier Arvind hand, and she went out, joined several global MNCs, and she's coming back as the leader. In between, she was with Levi's, and she was heading Levi's' South Asia, Middle East, Africa, and Eastern Europe business. She's been with Zimbabwe, with Nike India, with McKinsey, and with Motorola. So comes in with the vast global expertise. And perhaps the market's taking a bet that she will be able to drive growth in the retailing segment, in the branded apparel and retailing segment. Now, Rashi, now I come back. I know you're not going to talk about individual stocks, but in general, the market is pinning its hope on bottom of the pyramid consumption. Now, whether it is through, say, FMCG or QSR companies, or maybe even, retail companies. Do you agree with that view? Are you positioned for it in any way, retail or otherwise?
So I think that the market is focusing on the tax cut benefits that are coming through, and rural recovery based on the fact that we look like we're having a pretty decent monsoon. So a couple of these factors are extremely important when it comes to rural India, and they seem to be playing out. So yes, we do have a positioning which will benefit, a couple of positions that will benefit from that kind of rural recovery. They don't necessarily always have to be basic staples. Some of them can, some of them can't. But there are a lot of discretionary plays at the lower end as well, and there are other ways to play it. So yeah, I think that's ideally, if you're asking me, over the next 1 year, places where I hope to see growth higher than average and higher than historic, that should be one area.
Okay, all right. Rashi, we'll leave it on that note then for this afternoon. Good conversation. Thanks for joining in and giving us the context. That's a view that's coming in from Ashmore. What's the view from the street? Well, it's still down, 107. And it's just after 3 o'clock, so the expiry phenomena will start now. Is this decline going to accentuate? We're at the day's low. Or will there be, will the bulls pull a new trick out of their hat? We'll have to see. But right now, it's a lot of pressure on the market. And we're a little isolated because, like I said, most global markets have had a pretty decent day. Europe is up. US futures are flat. Actually, they were slightly lower in the morning, but now they've flattened out. So this is a bit of an isolated India decline that's coming through. Okay, so we'll keep tracking this as the expiry progresses. But in the meantime, let's go back and revisit the numbers that HDFC AMC posted, and the first quarter performance there is actually looking quite good. We've got Vamakshi joining in with the details. Vamakshi, tell us more.
Well, so it'll be much better than expectation are the numbers from HDFC AMC. When you look at the revenue, that saw an uptick of almost 7% quarter on quarter. It came in much better as compared to what the street was anticipating, and this time around they managed to hold on to their revenue yield of 47 basis points. Keep in mind, however, that their operating cost to income ratio actually saw an uptick of 117 basis points quarter on quarter. It came in 76 basis points higher as compared to what the street was anticipating, resulting in only a 6% quarter on quarter rise in the operating profit. But nevertheless, despite the kind of miss that we saw on the operating profit margin, the operating profit saw and came in better than expectations. The net profit though came in 17% quarter on quarter higher, and that is because there was a nearly 88% 4% jump as far as the other income is concerned. Let's look at some of the key metrics for HDFC AMC as well. The mutual fund quarterly average AUM saw an uptick of almost 7% quarter on quarter. This is largely in line with what the mutual fund industry had reported. The market share resultantly was constant at 11.5%. The equity quarterly average AUM also saw a good uptick of 8% quarter on quarter, and the market share here too remained stable at 12.8%. As far as unique investors are concerned, that saw an uptick of 4% quarter on quarter, and this grew at a much faster pace as compared to the rest of the industry, which saw an uptick of almost 2% quarter on quarter. So therefore, a good set of numbers coming in for HDFC AMC, better than what the street was anticipating. Resultantly, the stock is surging higher.
Okay, all right. Indeed it is on a tough day otherwise for the market. Well, let's take a quick break. Vamakshi, thank you very much for that. We'll take a quick break. Come back on the other side. Some final trading calls coming up with Mitesh.
Welcome back. Well, let's get straight to Mitesh Thakur, who joins us to help us out with a couple of trading calls. Mitesh, what do you have for us at 3 p.m.?
Yeah, one BTST and one STVT call. A BTST call on Prestige Estate, which I would recommend buying the stock below levels of 1770, and STVT on SBI Life, with a stop at about 1815 for targets of around 1775.
Okay, all right, got it. Thanks for that, Mitesh. We'll see you with, of course, all the trading advice in the markets tomorrow. For now, have a good day. It's fairly quiet. And the good news for the bulls is that at least that decline has not accentuated, at least not so far. So the Nifty is still holding with a cut of about 100 points. Okay, staying with more stocks and news and stocks that have been very active today. Thermax. Thermax has rallied almost 8-9% on a brokerage note, up about 7% even now. And this note is from Kotak Institutional Equities. They have an ad rating and they have a price target of 3,800. Stocks already trading above that price target, but generally their narrative seems to be fairly bullish on Thermax. Vamakshi is back. Kamakshi, why do they like Thermax?
Well, Surbi, in fact, the last I checked, the stock was up almost 11%, but, of course, we've seen some bit of cool down. Actually, Kotak Institutional Equities, like you mentioned, has an ad rating. They've gone ahead and increased their target price from 3,500 to 3,800. And what they say is that FY25 has been an active year for Thermax. The industrial product business saw most product as well as service launches. And in fact, the recent launches have been scaling up quite well for the company. The chemical business also managed to forge partnerships, enabling market access as well as growth capex in that direction. Industrial infra also stood out due to strong performance from Thermax Babcock, the business, and the R&D investments continued, for the futuristic growth opportunities for the company. Green Solutions, well, the TO ESL business reported double-digit margins, and they're also expanding their presence. Now, they assessed Thermax's FY25 revenue, and what they derived is that nearly 77% of the business reported a double-digit EBIT margin, 9% of the business reported 6% EBIT margin, and 14% of the business reported a loss as far as the EBIT level is concerned. But what they believe is that if the 14% of the loss-making revenue portfolio improves to even 6% EBIT margin, they're expecting 260 basis points of margin improvement and 35% boost to the segment profits. Now, when we combine this with almost 13% revenue CAGR over the next 3 years, they believe that the company could easily post an EPS CAGR of almost 22% over the next 3 years. So they appear to be quite bullish on this particular counter. Resultantly, the stock is flying high in trade today.
Okay, all right. 6%, big mover yesterday as well. Vamakshi, thanks very much for that. Ixigo is the other one, which is buzzing in trade, reported a strong set of numbers, and stock's been up and up since the morning. Mangalam, is there any institutional coverage on this one?
Well, no real institutional coverage, but the thing is that Ixigo's strategy of selling to the next billion has actually paid off. What they do and differentiate themselves versus all the other players is that they focused on the tier 2 and beyond sort of towns where there was a higher prevalence of trains, and as a result of which they gained their market share in trains about 58%. That has now surged to about 60%. But over the last few quarters, they shifted their strategy to also move people to their first flights, and that on a low base has driven growth for them. So if you look at it, on an overall basis, a 73% revenue growth is what the company has done. They've been giving a lot of promotions, and there is an ESOP cost factor as well. So as a result of which, EBITDA grew by about 54%. So there was slight compression in the margins, but nothing really to worry about when your revenue is growing 73%. And that's what the management said to us this morning as well, that they're chasing growth and not necessarily margins. And the net profit grew by 30%. So the newer verticals of the company, which were growing on a low base, are the ones that continue to lead growth for them. Airlines, for instance, that accounted for just about 40 crores in sales same time last year. That has now surged to over 100 crores, and that's seen an impact on their bottom line as well, where the EBIT for airlines has increased from 20 crores to about 40 crores. And all of this at a time when the train tickets were chugging along. 29% growth is what we've seen in their rail bookings as well. They've gained market share. And the buses business, which was earlier an underserved market, that has seen a near 100% growth as well. And in that, the take rates of the company, which is more margin accretive, that has increased too. A smaller part of their business, much smaller, is the hotels vertical, along with all the other value-added services that they give, travel insurance, etc. That has also seen a big surge. It's now contributing about 5 crores to their revenues, but the surge has been nearly 5 times over the last 1 year or so. And this is what the management believes can continue. Gross transaction value growth of over 40% sustainably over the next few years, with margins being where they are, and they've continued to gain market share. Same time last year, their airline market share was 5 to 6% of all the online travel agents. Now that number has touched double digits. In railways, ex of IRCTC, they're 60%. And for buses also, which is an under-penetrated market when it comes to online travel agents, is around mid-teens in terms of margins. Going forward, another monetization opportunity for them is the increased revenue that may come from ads. Because of their real estate available on the website and the traffic that they generate, they get about 5 to 6% of their revenue from advertisement placements. They believe that there is a further potential unlock out there as well.
Okay, all right, got it. So that explains the triggers and maybe the market's optimism around Ixigo and what definitely has been a good quarter by the company. Earlier today, we caught up with the management, Alok Bajpai. Let's listen in to his roadmap for the company for the rest of the year.
What you're seeing right now is essentially a result of several years of working for the use cases that Bharat or the middle class travelers in India actually crave for. I mean, rather than focusing on the first 50 million users, Ixigo chose to focus on the next billion users and build deeply thought use cases around trains, buses, and now flights. For the first time, flyers, you're seeing the flights momentum starting to come in. So we've benefited in these two categories, flights and buses, to grow way faster than even our own expectations. Both have actually grown in the 70s. In the passenger segments, GTV has grown at 81% for both flights and buses year on year. On the train side, we've managed to grow our market share within the OTA rail space. We were at 58% 2 quarters ago. We have crossed 60% in the June quarter there. On the flight side also, we have touched kind of double-digit growth, double-digit market share on the online travel agent market share piece. And when you talk about buses, I think we would be in mid to late teens right now. I think we are awaiting numbers from competition, obviously, to come in and corroborate some of this. But this is our initial assessment based on what we are seeing on the supply side.
All right, well, let's stay with earnings then. Axis Bank is going to be reporting its numbers. Gaurav has got a busy evening. Gaurav, but tell us what to expect and grab a cup of coffee. It's going to be a long, long evening.
Well, right, as you said, when we talk about Axis Bank, it is going to be a weak set is what Street is expecting, and there are two reasons behind that. First is that the loan book growth. We have already seen Axis delivering weak set of numbers in terms of loan book growth for the last few quarters, and now Street is expecting Q1 is also going to be weaker in terms of loan book. They're expecting just 7.5% of growth. When it comes to deposit, they're expecting 10% growth, but as a result, when we talk about other numbers, now net interest income is expected to increase only by 2%. Now, there is another surprise here. The net interest margin specifically is likely to decline only by 10 to 12 basis points. And the reason being that the repo-linked book, as per the repricing policy for Axis Bank, Street is anticipating only 25 basis point of fall has been passed on. And that is something where Axis can actually use this buffer. And that is the reason net interest margins may decline only by 10 to 12 basis points. When we talk about PPOP, which is pre-provisional operating profit, fee income is something which will support the growth, and as a result 7% growth is what they are expecting there. But again, second part comes where the credit cost is likely to go up, and this is because of the provisioning norms that Axis Bank has tightened, and that is the reason second impact of credit cost is likely to inch up almost by 40 to 50 basis points. Q1 is usually weaker in terms of agri loans, and that is the reason slippages may also increase, and as a result profitability is likely to increase only by 3%. Now, other than that, there are a few commentaries that we will be watching out for closely. First is that the commentary on the loan book growth, that is really going to be crucial given that there is a slowdown across the industry. Second is that margins are also going to be important, how the margins are going to shape up going ahead. Asset quality is also something that we are watching out, how the commentary is going to be. And lastly, management attrition. Now, let's not forget that Mr. Rajiv Anand will retire on 3rd of August. So any kind of commentary there, how they are going to handle the management attrition, it is going to be a key thing to watch out for. But in terms of numbers, weak set of numbers is what we are expecting from Axis Bank.
Gaurav, thank you very much. So that is, of course, as markets come back tomorrow, there will be reaction. Flashes at the bottom of the screen. The India-UK FTA is likely to be sort of signed next week, and officials are contemplating the agreement next week. Some more details. Abhimanyu is getting us this story. This is coming in from government sources, so we'll actually go across to him in just a bit from now. So legal modalities, etc. Are being discussed at this point in time, but looks like we're very, very close to the finish line in that sense. But back to previews, Wipro is the next one. First quarter numbers today, later. IT so far has been disappointing. Let's just get a quick preview with Reema. Reema, over to you.
Indeed, but first, the Q1 numbers, dollar revenue growth is seen declining 0.9% in dollar terms sequentially. In constant currency terms, it will be a drop of 2%, which means closer to the upper end of the guidance. The company had guided for -1.5% to -3.5% for Q1. We're expecting about a -2% revenue growth. But you know from the peer performance that it's been a very challenging quarter. All the companies have reported steep revenue drops. Look at TCS at -3.3%. Because of the revenue pressure, margins will come under pressure and contract to 17.1%. Now, as you pointed out, the key is the Q2 guidance. And again, it's not expected to be great, plus 0.5% to minus 1.5%. One of the problems for Wipro has been in Europe, they've been losing some market share. So despite Capco, Europe performance has been a bit middling. That said, in the second half of the year, analysts are hopeful things pick up on account of the Phoenix deal. So, when we quiz the management or listen to them in the press conference, you want to find out the reasons for the Europe decline. When will it get arrested? And again, considering that this company has been underperforming its peers, when do they play that catch up and when do things recover to industry growth rates?
All right, Rima, hang on. LTI Mindtree is also reporting its numbers, right? Tell us the key expectations there.
Well, LTI Mindtree also, it's, on the dollar terms, dollar revenue is likely to go up by 1.7%. In constant currency terms, it will be a growth of 0.85%. So basically, unlike large cap IT companies, where we're expecting a revenue increase, for this mid-cap company and many other mid-cap companies, revenues are likely to grow despite the challenges. In fact, the company had indicated that in Q1 we could see a bit of a growth. The financial services vertical has been doing very well for them. And for the last 4 quarters, as you can see, BFSI has been clocking growth, and that's likely to be supportive. There is going to be margin expansion too, margins expanding by 50 basis points, because the company had come out with a strategic roadmap. It was called Fit for Future. So basically, they wanted to increase their margins, focused on cost optimization, optimize the entire business environment. So therefore, EBIT margins are likely to go up, and profits, according to the CNBC-TV18 poll, should be up by close to about 6%. Here, the key to watch will be when do they get back to the desired margin range of 17 to 18%. And historically, the company's growth rate used to be the top of the quartile. When do they get back to that?
Okay, all right. Got that, Rima. Thank you very much for all the previews and the heads up on the upcoming IT earnings. We've got Amrish Balika joining us to take us through the last leg of the show. Amrish, good to have you on. So first, let's get IT out of the way. The numbers have nothing to write home about.
Absolutely.
But I don't know, are you being an outlier? Are you willing to buy any company? Even stocks haven't run up too much this quarter for the same reason, right?
Yeah, but I think the pressure will still remain for a while. So it doesn't make sense jumping in and buying right now. I think it's better to wait for at least a quarter or two. Let us see some green shoots. I think it's only after that one should really start buying. Although you may have to buy possibly 5-8% higher, but it's better to wait for those signals before you start buying. So as of now, I'll just stay out.
Okay, all right, Amrish. But as always, you normally bring a stock to the table. Today you're going with a pipe maker, right?
Yeah.
Finolex Industries. Tell us more.
Yeah. So it's like one of the leading manufacturers of PVC resin and the largest producer of PVC pipes and fittings in India. Organized segment, they have about a 30% market share. And if you look at the range, they have a large range of CPVC and PVC-U pipes and fittings, which find applications in agriculture, construction, as well as industrial operations. And they have 2 major divisions, PVC resin and PVC pipes and fittings. And they had a capacity expansion of about 25,000 tons done last quarter. This quarter, you'll have another 25,000 tons being added. If you look at the free cash flows, very, 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 very healthy free cash flows. A strong brand presence in the agri-pipe space, where normally you have the government contracts or credit. But here, because of the sort of a brand which they have, they've been able to get away with cash and carry basis. So that also reduces a lot of risk. And the management has guided that FY26, they'll have a double-digit volume growth as well as improved margins. So my expected EPS for FY27 is around 11 rupees. And from that, the target price is about 275.
Okay, all right, got that. I just wanted a quick view on Mahindra & Mahindra as well, because if I look at it on a day-to-day basis, any kind of dip gets bought into. Clearly, the street is sensing something on Mahindra & Mahindra. Just take a look at that. Shallow dips are getting bought into. The markets are at the low point of the day, but that's moving to the day's high. Very quickly, Amrish, your view?
If you look at, Mahindra & Mahindra in the last 2.5 decades, I think the last major move which started was when they had launched Scorpio. And that changed the complete view on what Mahindra can deliver. I think this time, the XEVs which they had launched in April, I think that's the Scorpio moment for Mahindra & Mahindra. And this I think will clearly show as to what Mahindra & Mahindra can deliver in the EV space. The price point, the sort of features which they have for the vehicle, I think that's going to be a huge growth area, going ahead. And if you look at the price movement, I think it was the lowest when this vehicle was launched in April. And from there, we have seen close to about 1,200 rupee move. So Mahindra & Mahindra overall, I mean, if you look at even the monthly sales, I mean, they have been outperforming. So overall, I'm very positive. Even at these levels, I'll hold on.
There are two things with Mahindra. One is, by the way, the Mahindra Group chairman, by the way, speaking. I think there's a Tech Mahindra AGM, which is on right now as we speak. That is one. And the other, of course, is this buzz which has been on for some time, for the last couple of days at least, that there will finally be, a three-way sort of, demerger of various businesses, etc. We don't know if something that is like that will happen. I remember right here, Subi, I don't know if you remember, Anisha was in our studios night.
Yeah.
And I asked him point blank whether that something like that would be under consideration. He said, well, nothing of that sort is on the table. We're not considering. But this was, I think, at least 2-3 quarters back, three quarters back. So I'm not sure if something has changed, but the stock's moving up.
I think in the interactions with Anish, all of us have had that question once. I think so. And he's denied all the time.
He's been consistently
But the street is sniffing that. Is Mahindra & Mahindra going the Tata Motors way? So that's unlocking some value and see. Let's see how that goes.
And we'll have to see in terms of, on a per share basis, what does that really mean? Let's wait for some kind of announcement. If we're thinking in the right direction and the market is sort of sniffing the right thing, or no, we'll have to wait. 100 points lower on the Nifty, 25,106. We'll slip into a quick commercial break here. But as we do that, here's some good news for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screens now.
Okay, we're all set to the close. Just 2 minutes to go. About 100 points. Still on the lower side. Amrish, very quickly, 1 last minute left. Today, metal stocks have done really well. Do you like anything in metals?
In fact, in metals, I like Tata Steel. And I mean, from here, we should at least see about 80-20% sort of a move over the next possibly 8 to 10 months. So that's one pick which I have in the steel space.
Okay, all right. Nigel?
By the way, we just had some numbers coming in from SW Solar. I think the street was sniffing that the numbers will be going to be good. The revenues, I think, have doubled out. Their profitability as well has gone up. I think the stock was holding with a gain of around 1.5% or thereabouts. Now, in fact, it's coming for some profit taking. So maybe the street had already priced in that these numbers are going to be looking good on a low base. But first look at it. It appeared big bounce up in terms of revenues and the profitability as well up numerous times. Those numbers will flash for you on the screen. But let's do a quick wind down of the markets. Then we ended the weekly expiry closer to the lower end of the band. So we went down at the start of the show. We were telling you 25,100 odd. That could be the level that will be the crucial support mark. We went within a few points of breaking that mark, but it held on towards the end. Well, the problem today was the Nifty Bank. That has defended the 20 DMA or ended closer to that, but it ends with a cut of around 350 points. Tech Mahindra, disappointing numbers. That stock was down. Infosys was down 1.5%. IndusInd Bank and SBI Life, all of them lower in trade. What did well? The Tata Group stocks bounced back. Tata Consumer, Tata Steel, Hindalco did well, and Mahindra as well saw a bit of a surge in the final hour of trade. So that one, in fact, ends with a gain of close to around 0.5%. The stock of the day in terms of an earnings reaction was Ixigo. That stock goes home with a gain of nearly a circuit. While on the downside, you had JTL Industries. That one, in fact, did see some profit taking down close to around 4%. So those are the big movers, actually, from the broader markets in terms of some of the stock-specific action in trade today. AWL Agribusiness. You had Wilmer now, that's the owner. The Adani Group is mostly out. I think they have only around 11% stake out there. So that was the big mover as well today.
Okay, I mean, enough activity, right? I mean, although indices sulked, Nifty IT, of course, once again, the big loser, 1.5% lower, but enough and more action as far as the broader market, as Nigel outlined. We will, of course, continue to pick out and highlight what happened in the day and, of course, what the day tomorrow may look like in, of course, Markets Forward, which comes up in just a bit from now. Thank you very much from all of us here.